I've been talking the whole time. I've been talking for literally 13 minutes. My mic has been off. I'm sorry. Thank you. Thank you. Um, so let me say what I was saying. I'm looking at being able to buy on this overall move because it was above the overall moving. It was above the overall area in the free run zone. Now it has fell back inside of consolidation. In this case, I'm going to end up exiting off of this trade. I'm going to take that quick loss. There's no reason to stay inside of this trade at this particular point because it's done fell back inside of consolidation. So I take that loss. There's nothing wrong with being able to take a quick loss, especially if you can be able to see that it's not going to end up working out in your overall favor. However, what I'm going to end up doing now is that if this market is going to remain to be bearish, then I'm going to end up placing in an order on the bottom of these supports at 31,750. Now, I'm not trading inside of this consolidated area because to me, that's a 33% trade to be able to take. So there's no reason to be able to stay inside of that trade at this particular point and be able to go from there. We take a look at what's happening with Nas. Nas end up basically it's in the middle of this consolidation spot, so I'm not interested in being able to make a move on that yet. So my primary thought process is seeing what happens with seeing what's happening with the Dow Jones. If it breaks above 3,200 again, then that means that I'm going to have to adjust my overall area where I'm going to end up getting into this trade. The new resistance is up here now. So the market will have to be able to break that level before being able to get in. This market, for me being able to get in on any type of sale, will end up being around 31,750. So I know that's 200 points away. I can see that this market is truly making that movement right now. So that trade is over with, but we can get ourselves situated and set up for another trade. Um, Sometimes what you end up doing is sometimes you may end up deciding to be able to martingale it. I'm probably not going to martingale it on this one. I'm just going to end up seeing how the market kind of reacts and then kind of go from there. But I am going to end up making a short pending order. Let's see. Let's see. Let's see. My wife sent me a funny message. 31 750. 750. I place my stop loss if it's 31 750. Um, we'll go 31 950. Or no, we can go actually if it breaks down to the bottom and stays right there. I'm gonna say 31. Um, we can go point of control. I'm gonna say 31 880. So it'll be 130 point risk if it does fall there. Take profit when it comes down to this position. If we go based off of the last free run areas where the market has made that movement, the easiest way to be able to get out would be at 31 360. So let's say 31 360 as the overall area where the market could potentially fall down to the downside. Okay, so that's what we have right there. Now I am going to end up placing in that other I'm going to place in that other pending order back up to the top, but I just have to adjust the numbers. Now keep in mind in this style of trading, um, if we're going to lose, we're going to lose quick. Because we know if the market falls right back inside of consolidation, then there's no reason for us to be able to get into stay into that trade. So I'm not necessarily mad that we lost on the trade. It just proves that the market is not ready to be able to break out, right? For the people that are in this trade and the market is done move for them, that's great for them. They're trading inside. To me, they're trading inside a heavily consolidated area. I'm just not one of those people that are interested in being able to trade in that. I like trading breakouts. I like trading buying breakouts. So got a risk reward factor 1 to 2.8, 1 to 2.28. When it comes down to this, obviously you can bring your risk down a little bit more if you want to place it right at the point of control. I'm placing it just above the overall highest price when it comes down to point of control. Actually, we can go a little bit lower on this one. Um, we can go 870. So I'm still going to say 31 880. I still say 31 880. That's a stop loss. So if it does break down to that area, I have a pending order ready to go when it comes down to that position, being able to get in. I am setting that order up right now. So that'll be the next pending order for if the market does break break to the downside. Now, if it breaks up to the upside, then obviously I'll probably end up placing in that order right around 32,880 at this point, because that will be a true breakout area with the market being able to go up to, based off of the hour, going back up to the point where I thought it was going to end up going up to, which would be 32,850. So once again, still not a bad situation. Um, it just means that we end up taking an early loss this morning, and we'll see if we can be able to get it back. And if it's not in this position, maybe we can be able to. Why did I do that again? Do the long. Oh, that was a long position. Okay, cool. 32,880 will end up being that stop loss in this case. Now we end up being just below the overall point of control. It'll probably end up being 960 at that point again for this overall movement. So that is what I'm waiting for when it comes down to US 30. US 30 is now in the middle of consolidation. To me, that means that if the market is going to remain to be in a range, then I'm not going to end up staying on that trade. So there's no trade to be able to do when it comes down to that spot. It's just that now I just got to place in a pending order at those positions again to be able to get back in. So pending order now, new adjusted pending order. I'm going to say 32.85. I mean 32.85. Stop loss will end up being at 31,960. Take profit will end up being at 32.8. What was it? 32,840, I believe. Yeah, 32,840. Remember, July is one of those months where the market is going to end up being in consolidation. It happens all the time. So there's no reason to, if you're wrong, then be wrong quick. Um, I'm fine with being wrong quick. If that means that I just take a little bit of a loss, then I would rather take a little bit of a loss than taking the full percentage of a loss. Also, that means that I can be a little bit more patient and kind of trade on the edges of the overall market when there's going to end up being a full decision on what's happening with the market. I'm not worried about the loss. Money will end up coming back. All right, here we go. Let's take a look at what's happening with Nas. Nas has broken out of this overall area. We finally end up breaking out of this area. Now, I actually am. Did I take that trade? Did I place in a trade on Nas? No, I didn't, but it's in another consolidation spot. Okay, so I would be interested in being able to take the trade with Nas. Let's take a look at where could it potentially end up going. Because we got a lot of areas of consolidation. Go back to the hour. We do have a breakout. I say this market can go to 12,130. The hour is in the sell zone, which is a good thing. It probably will struggle right around this area first. There's no true scalping area where this market could potentially go. To be honest, I'm still going to hold off on Nas. I can see that if this market does break, there's a pocket from right here to right here that we can be able to take advantage of. Um, we can have a lower risk if we want to be able to do that. So let's say if this market stays and holds behind this, the risk will only be 100 and actually be 100 points going after 228. So I do like that. But if it pushes back inside of that consolidation, then there's no trade to be able to take. I just place my pending order on the outside of this consolidation area. I would say one, 1, 2, 3, 4, 5. That's funny. Um, Entry on a pending order when it comes down to this one would end up being, you could say 1, 2, 3, 4, 5, or you could say 1, 2, 3, 4, 0 as the position to be able to get in. So that means that it would truly have to fall and break and stay below that overall number that it tried to push through to be able to place you inside of a trade. If it does not happen, then after that, you'll be good to go when it comes down to being able to trade this one. Um, so I'm looking at a pending short. I'm going to write 1, 2, 3, 4, 5. 2, 3, 4, 5. Stop loss will end up being above the swing high. I'm going to say 12,450. 12,450. With a take profit position at, if this is the high of the overall resistance, we actually have to go a little bit higher because that's the high of the long term area. I don't know if that'll mess up the overall risk reward factor. I'm going to say 12,175 as the position. Now, because this one is not necessarily the best looking position to be able to get into, I'm only going to go 2% when it comes down to this trade. And I'm going to go ahead and lock that in now for the overall positions. But I do like that order. Everybody give me 1 second. Let's see. All right, so if this market does pop back down to the downside, then obviously we can be able to get into that trade. But for right now, we look at what's happening with that, and we take a look at what's happening with US 30. Both of those are basically in the middle of consolidation. There's really no trades to be able to take in those areas and feel very good about. Now, for the people that end up making money off of that move very early, then great for you. For me, I'm not fighting inside of this area. I wait for the market to be able to come out, and then after that, I end up placing in my order from there. When it comes down to both of those positions. Let's take a look at DAX. Let's see. US 30 has a trend line on the 5-minute chart. Let's take a look at it real quick. Yeah, it may end up breaking an aggressive trend line, and obviously we're seeing a morning star over that move. If it remains to be that way, then that's great. But this is me personally talking when it comes down to being able to trade. One thing that I end up noticing, and I think I ended up noticing about 3 months ago, I've been trading bond profile for about 6 months, but really and truthfully, probably about 2 months ago, what I ended up noticing was that high volume nodes basically end up showing consolidation. If they end up showing consolidation, then really and truthfully, the only rule when it comes down to consolidation to be able to make money is that you want to either buy at support or you want to sell at resistance, and everywhere else does not matter, right? Well, if you look at this high volume node, we're in the middle of this consolidation area. Consolidation trades don't have a high probability of being able to win. To be honest, you only have a 47% chance of being able to win, whether if you're buying at support or whether if you're selling at resistance and trying to take it all the way down to either support or buying it all the way up to resistance. So, in my mind, there's no reason to trade it in that area, because if you trade it in the middle, then that means that you only have a 33% chance of being able to win. Well, to me, 33% is not a very good odds when it comes down to trade. It's not. I like being able to take trades that give me a 70 or 80% chance of being able to win. So if I'm in that case when it comes down to being able to make a mindset when it comes down to trade, I am not going to end up trading inside of that area. I'm not interested in being able to make a trade inside of that area. If that makes sense to you. Now, when the market breaks out of that area, then obviously you can have your 60 or 70% chance of being able to win. So when everybody else is exhausted from fighting in this overall spot now because we had to adjust our overall positions, now when this market breaks out of this area, you're going to see a large movement on either the top side or the bottom side of this high volume node because there's no trading volume in this overall position historically. So to me, it makes more sense to be able to trade it like that instead of just waiting or instead of getting fooled by what's happening in the inside of that consolidation. I'll let other people fight and lose money inside of that area. I will just make money on the outside of it. Now, it took me a long time to learn that, but that's my overall thought process when it comes down to that. Type in a while, yes, if that makes sense. like anything, um, obviously it's your money, it's your decision on what you're going to end up doing when it comes down to your trade. So, so we take a look at what's happening with German 40. This will be the last chart for today. We go to what's happening based off of the daily. Daily is inside of a large consolidation box. You take a look at what's happening when it comes down to this overall. There's a very large high volume node that started off from 13,875 and then after that pushed back up. Currently, right now, we can actually delete this because we've actually done moved outside of that area. But um, when we take a look at what's happening currently at this particular moment, we can see that most of the trading volume is actually inside of this area from here to here. If the market ends up breaking below 12,440, then that means that it's going to end up pushing down, and it could go all the way down to, I believe, what was it, 9,000 or 10,080, 10,380 for what's the overall take profit position from there. If it breaks up and breaks above 1,400, then it could possibly go up to at least 15,183 before being able to make a move from there. So we take a look at it from an hour perspective. The market is still inside of this consolidation. I have pending orders that are set up and ready to go on the outside of it if it does break. I think I end up getting stopped out of one this morning because I ended up having a trade at 12,150. The market ended up pushing back inside of the consolidation when I ended up breaking and going from there. This is the same thought process on pretty much every trade. You can see that the previous free run area was from here to here. We see that the market has went inside of consolidation, so that means that today there's really no trading until the market ends up either breaking 13,350, 13,350, or if the market ends up breaking below 13,130. Okay, so just to give an example once again on how to be able to take a look at this. I love being able to look at this based off the 15-minute, but you can get a better idea about what's happening based off of the hour. We can see that the hour is in the sell zone, so it wouldn't surprise me that the market would fall today. But the question is it going to fall and break out of this high volume node? That's going to end up being the only question that I would truly want to know. My pending orders that I would end up placing in from this position, we know 13,145 is the natural support, so I'm going to say 13,140 as the overall pending sale area where I would look at being able to get in if the market ends up shorting. Now, the risks on that or the overall area where I place my stop loss can end up being two areas. One, you can go right behind this high volume node, or you can go above the actual support or actual resistance. I'm going to place it just above the high volume node because if it breaks back inside of consolidation, then I don't want to be in it. Stop loss would be 13,220, so risking 80 points. Take profit will end up being at basically 13,000. Risk reward for me on this one will probably end up being right around 4%. So it'll be a 1.74 risk reward ratio when it comes down to that trade. I feel good about being able to take that if it does break down to the downside. So I'm going to go ahead and lock that in. So on this one, short position, 13,140. Stop loss, 13,220. Take profit will end up being right there. Now, if it breaks to the upside, if it does break to the upside, I like the odds of being able to get in at 13,350. Now, the question is, where could it potentially go? What could we get out and get out safely? The market has already completed that first that first notch when it went up to 13,448. So 13,450 will probably end up being a very good spot to be able to get out. If you want to push it a little bit more, um, no, that would pretty much be a scalp. I'm going to say 13,450 would end up being the take profit from that position. That would be the first trade off of this one. And then after that, I'll place in an order at 13,550, in which I already have in. That's one of the orders that we ended up placing in last week, where we end up getting out at 14,320. Okay, so we got two orders from there. But legitimately, from trading this right now, at least for today, there's no movement or there's no trade to be able to take until the market ends up breaking out of this area. I think that's the reason. That's the best part about this style of trading. You don't have to sit up there and stay in the market and try to fight with everybody else. You can place in your pending orders. You can go to sleep. You can do whatever else that you need to be able to do. Because, quite frankly, to me, I'm not fighting with everybody else on this one. I'm not interested in being able to fight with anybody on this one. Let's see, 450. See, now I got to figure out what my stop loss is going to be. Give me a second. I'm probably going to place it below this point of control. It's at 13,298. So, move this back inside. I'm going to say 13,260. So, the entry long will be at 13,350. Stop loss will be 13,260. Take profit will end up being 13,450. Risk reward is a little bit different. It's a 1-to-1. Don't necessarily like 1-to-1s, but when it comes down to breakout trades, I feel a little bit more comfortable in being able to do that because once again, you can eyeball it and be able to see if you need to hurry up and get out. It proves to you very quickly if it's not ready to go. Kind of like what happened this morning. So if I had to take a little bit of a loss to be able to truly know that I got into a trade when the market was ready to break out, then I'm totally fine with that. Okay, so all my orders are placed in. I'll place these as examples online for everyone to be able to take a look at. But for right now, there's really nothing else to be able to do. We take a look at what's happening with US 30. US 30 is back above 3,200. Remember now, because the market could not break above 3,280, that is now the true resistance from this overall spot. So even though I got in at 3,200 last time, the market is telling me that it's not ready to be able to make that move from there based off of new data. So 3,280 is the new position. If it does break out of that area, then I'll be in a trade ready to go for it being able to go from there. Stop loss, remember on that one, it's right around 31,960 going after 32,840. So you got a larger position when it comes down to being able to get in on US 30. It's going to take a little bit of a while to be able to go and complete that overall spot, but it's definitely worth being able to stay in on that trade if you can be able to get in. Other than that, everyone else, like always, plan your trade your plan. You like what I end up doing, go ahead and boost up this video and be able to go from there. I will have a recap video of what ends up happening today if there's something that does happen. If it doesn't happen, then obviously we'll probably just wait till the market ends up placing in one of our pending orders and we'll go from there. Like always, plan your trade your plan. Everybody take it easy. Bye.